what are they spending that money on? Well, slide 13 will show you, and I was struck by watching the football game 2 Sundays ago, where all of a sudden, I'm seeing a TV commercial. So it's a national TV commercial, as you can see right in the center of that slide, for an Applebee's buy one, get one free. And what this tells me, right, is that the franchisees are making 50% less. So if you go in and pay, $10 for a meal and all of a sudden you get one free, guess what? You're only paying $5 for that meal. So that's a real problem for the industry. And in a week later, Chili's brought out its half off, full-size steak or baby back ribs. So it's causing others to respond to this problem. So this is a zero-sum game to begin with, and now the zero-sum game is being, marginalized into lower profitability for everybody. And this is just bad news. And of course, Ruby Tuesdays is probably going out of business, and they're just giving away food left and right to get people in. And then, Outback hasn't quite gone there yet, but you can see where I'm going with this. So Applebee's raised their contribution dollars last quarter, causing a decline in margins, and now they're spending it, or they're helping to spend the franchisees' profitability, which is just it's insanity.
What is your view on the current promotional landscape, and will Applebee's be forced to do more in order to improve their comp trajectory? And kind of, if they're going to do more, it's likely that others are going to do more. What's kind of the end result in that in the overall casual dining space?
So this is a real problem. So you go back to that slide that has the buy one get one free for Applebee's. I mean, this is, again, I told you I had breakfast, with the CEO of a casual dining chain this morning, and he was shaking his head. He couldn't believe it, and I was shaking my head, and I can't believe it. And it's, this is a disaster. You can't do buy one get one free. I mean, that's just it. It's so scary at what the implications are for this, but desperate chains do desperate things, right? And that's, it was what put me over the edge at why this stock is a great short, no matter what the dividend and the cash flow of the asset light model is. So, as I also saw that, Chili's had to respond to that. I got my email the other day. I haven't seen a national TV ad for it, and I hope I don't see a national TV ad for 50% off at Chili's. But Shane, this is just, I can't tell you how ugly this is going to get for the casual dining industry.
Yeah, it's not, especially
if this continues, yeah.
And not to mention when commodities start to turn against them, it could be a real issue.
Well, the problem is when commodity turns against them, they're not going to be able to raise their price, right? Yeah. And no one's going to come back because they're going to wait for the next discount. I mean, it's a death blow. It really is a death blow. It's why you feel really comfortable, why I feel really comfortable being short Applebee's. I mean, it's scary.
Don't worry, I feel comfortable too.
Thank you.